I'll call us to order. When you do a roll call, I mean, everybody's here except Nicole, so that's a roll call. You know, I'm going to rearrange things. Everybody can hear me, I assume. Nod your head. All right. All right. Good. And hopefully Kevin won't cut out either. I will see if there's public comment for any items not on the agenda really quick, and then I'm going to jump to number 3 because we have our auditor here, and that way we can tackle the biggest item on the agenda first. All right. And he can leave if he wants to after that. So any public comment for items not on the agenda?
No, I'd just say you guys did a great job recently. I'm real glad to be associated with all these wonderful people at Rancho.
Thank you, Jenny. All right. Then let's jump to item number 5, approving the draft annual independent audit for 2019 and 2020. Mike Fink is here. I believe I remembered your name. Yep, our auditor. So he can answer any questions, but I'll let Kevin, you want to take it away?
Sure. I enabled the screen share, Mike, if you had anything you wanted to. Otherwise, it's okay to just whenever you're ready.
Sure. Yeah, I wasn't sure to the extent that you guys committed time to looking at the last draft as opposed to the final that was probably sent out just for this most recent agenda. I do have it open on my screen, and I'm happy to share it if that makes life a little bit easier. Certainly, maybe it looks a little bit better than my ugly mug, but I assume that each of you had a chance or to at least receive a copy or take a look at it as it was finalized. Okay. Let me see if I can pick the right screen here. I apologize if I'm looking around. I have 3 monitors staring at me and some notes also in front of me. Let's see. This will probably be as close to full screen as I can get it. Is everyone able to see the report there?
Yes.
Yeah. Okay, great.
Do you mind increasing the font? Just take it up to 100%.
Oh, absolutely.
Thank you.
Of course. Let's see. There's the page down. Okay. Well, thank you guys very much for having us for another year to do the audit. We enjoy doing this audit, and unfortunately, this was the first year that we weren't able to physically come out and visit. I actually like visiting the area a lot, so hopefully next year things will be a little bit in better shape and we can come by and visit again. But again, we're happy to do this audit even if it's remote. I believe a few of the board members here are newer and this might be the first audit report that you guys are looking at for Rancho Rincon Audit. So of course, if I'm going either a little quick or if you have any questions, please do not hesitate to stop and interrupt me and ask me anything you'd like. That's why I'm here. And I guess we can just kind of dive into it. I'll go at a fairly high level. I don't know that we need to dive into individual balances unless you have specific questions. In which case then we can kind of shift our focus for that. Of course, COVID has made everything a little bit unique over the past year, has kind of changed some of the procedures, not only in the effect of performing your audit remotely, but also some of the areas that we need to focus and concern ourselves with. Now, of course, a local government agency has a little bit different of a risk set as opposed to a lot of non-public agencies, restaurants, or other businesses that would be more greatly affected. Of course, your income streams through property taxes continues to keep everything afloat, even in the event of interruption for certain program revenues. But all that being said, I feel like Kevin and the rest of the staff did a good job stepping up and giving us everything that we needed to perform the audit this year, even in a remote fashion. It requires a little bit more scanning or figuring out how to transmit documents, and that's not quite as fun. So we appreciate the efforts on your end. And we essentially didn't have any difficulties in completing the audit and completing the final report. So essentially, we kind of like to talk when we start off about what an audit really is. The scope of an audit might be different in some manner or perspective depending on who we're talking to, but it's essentially the obtaining enough evidence to give reasonable assurance that the financial statements as presented are free from material misstatement. So of course that limits the scope of what it is that we're looking at. There's a lot of sampling. We're not looking at entire populations of every single transactions throughout the year. But we do our best to focus on areas that we think would be of either heightened risk or areas that you guys might be more interested in us looking at to make sure everything's working properly and reported in compliance with GAAP. That being said, can kind of skip past the table of contents as I go through here. Of course, the most important component and really the true section that's kind of on us is the auditor's report itself, which is on pages 1 and 2. What we're looking at is the opinion letter. So, I mean, a lot of it's kind of a canned report for the first page, talks about the parties involved in their responsibilities, what the report on the financial statements should actually include, and things of that nature, kind of what I was talking about, what our purpose was in expressing an opinion on these financial statements. We didn't have any scope limitations and had sufficient evidence to provide our opinion, which is on page 2. Kind of skipped that here. Essentially, this is a clean opinion, meaning that we did not find any material misstatement or any departures from GAAP. And we feel that, within all material specs, these financial statements are accurate. We do have some other supplemental information, but really it's just focusing on the fact that you guys are required to provide a management's discussion and analysis and a budget to actual comparison. Those are the only other 2 components that are in addition to the normal financial statements. The MD&A, the management discussion analysis, is what proceeds after this opinion letter here. Now this is interesting and is really the one place that the district would have the opportunity to provide more subjective information, insight as to how the financial statements appear the way they do. It does focus on comparison from prior periods, and then what changed, and then any prospective information that might affect what future reporting periods look like. But it really, this is more a very high level version and summary of some of the information that we found in the audit report itself. This is definitely somewhere, that's something that you guys could retool year to year based off of what you think your needs are and what you want to communicate to the users of these financial statements. But essentially the formatting was the same as the last year's. We didn't change a whole lot of things here, other than we did talk about some of the effects of COVID, the expectations with some program interruptions that might take place all the way well into 2021, as unfortunate as that may be. And of course, how to obtain certain information from the district. So this is more just very high level compressed summary information from what we'll see in the financial statements. I'll kind of skip past here if you don't mind. Of course, if this is too small, I'm looking at a 30-inch monitor, so it's a little bit big on me, but it might be small on your screen, so I apologize. Just tell me I can zoom in on a certain number. But here we go with the basic financial statements. So it always starts in the government with the government-wide financial statements, which is the statement of net position and the statement of activities. Terminology for essentially a balance sheet and an income statement. These are reported on a full accrual basis, which makes them a little less relevant for certain government agencies and what they're curious about looking into, but still is a required portion of these financial statements. So what we do see here, and there's not a whole lot of differences between the governmental fund statements, which I'll get to in a minute, and what we see here on the government-wide statements. Long-term assets and long-term liabilities will be the big difference here. And then the related income and expenses that have to do with those types of account balances. So things like capital assets and the related depreciation expense. Any debt, if you guys were to have any, would show up here, things of that nature. But what we are looking at is an ending net position in 2020 of $2,316,611, which is a notable increase over what we show as a comparison for 2019. Year over year, for the short term that we've been with the district, we have noticed a continual incremental increase, which even amidst COVID is actually kind of impressive. I probably feel like that's demonstrates the district's ability to maintain a good budget strategy and stick to it, which again would be difficult given the circumstances. Another key area that we kind of like to focus in on is total balances of cash and what that net position looks like. We feel, at least in my opinion, when I'm looking at this and what your expenses are on the next page, even if there were a total interruption to all sources of income, if property taxes were to not be remitted by the county and the state, and then if you guys were to not have any program income, you still have sufficient reserves to where you could maintain operations without interruption for at least 12 months. And that's kind of been a key area that we've been focusing on during COVID, and making sure that there's no going concern issues is what we would like to call it as an accountant talk for. You guys would be able to continue as a, operation. So that was the statement of net position. The next page will be the statement of activities, which again is your income statement. These look a little funky for governments, but essentially it starts with just governmental activities up front, which is typically going to show a net loss because property taxes are stated separately down below. But even with depreciation expense, we still see a positive net income of 165,000, again, which we thought was actually kind of impressive in the circumstances. Are there any questions on the government-wide statements themselves? Doing okay? I think I have to stop myself. I tend to talk a little fast. I apologize. So we also show 2019. I apologize. The comparatives fit on some reports, not others, but this is what last year looked like, which again was still a positive net income. And then this year was still $20,000 more. So now we have the governmental fund statements. And again, usually government agencies tend to place more importance on these reports here, just because it is the immediate economic resources, the financial resources that are available to the district for expenditure. So again, what we're excluding here essentially are capital assets. Everything else is about the same. We even show accrued compensation, which is paid time off for staff members as a short-term liability, which actually kind of would prefer to show this way if it were me, just because there is an expectation that employees are going to use vacation time within the next 12 months. I feel like some government agencies like to show that as a long-term only liability, which is kind of interesting, but I digress. So again, we're still focusing on what we see here in the current ratio is decent in that you guys are definitely heavy in assets, and that cash balance in the treasury helps. Another interesting area is the fact that most of the balance is kept with the county, which mitigates most risk areas when we start to see higher balances in traditional checking accounts, things of that nature. Because if we had that balance in, say, like a Wells Fargo checking account, it would be exposed to certain risks beyond what FDIC would insure you guys for in excess of $250,000. So no extra disclosure or risk there to be concerned about. Some of the key differences that we see from last year when we look at them side by side is deferred revenue significantly dropped. And that was expected. And this was kind of an area I think the board was interested in last year and what makes up this number. I know that the district accepts a lot of swim team, swim classes payments, and those are typically paid in advance. So until you guys actually provide those services, those revenues sit as a liability until they're earned. This year was a little bit different though, because you had some program interruptions, so we don't have a large balance in deferred revenues. Hopefully, if everything kind of turns around, then we'd expect that number to grow a little bit. So we ended up with the total fund balance of $1,387,000. Now that number is a little bit different again, like I mentioned, because there's some differences between the government wide. And the next page will show us the reconciliation between that. So it's usually easier to show these on a separate statement, which is what we do here. And again, the only difference between the governmental fund statement, which we just looked at, and the government-wide statement, which is the number we saw on that first page we're looking at, is the difference in the net investment in capital assets. There's not a whole lot of complexity to the district, so there's not a lot of other numbers that would be building up the difference to reconcile. If we did see long-term debt or other long-term assets, or if you guys had OPEB or pension liabilities, it would show up here. Next, we have the income statement, statement of revenues, expenditures, and changes in fund balances. Again, we're showing them in a comparative fashion here. So what we do see, like we were expecting, again, is that there is a bit of a drop in the charges for services due to the program interruptions, although there was a slight increase, which we see year to year in property tax revenues. So even with the drop in revenues here, you guys are still driving an increase in total net income, because we also see a corresponding and greater drop in total expenses. That could be a function of how you guys budgeted your fees, as well as managed payroll expenses even during the pandemic. And you guys didn't really have a lot of purchases and capital assets. And some of the other expenses we could see dropped, whether, naturally whether it's insurance or utilities when things aren't in use. And overall, payroll is probably your biggest expense and is expected to be, so that made the biggest swing too. Again, we're still looking at a positive change in fund balance and an increase in such over what 2019 looked like. So that's pretty much all I have for you guys on that. Again, we have the reconciliation immediately following this to show the difference between the government-wide and the fund statements. And the only difference here is the cost of what is expended on the fund statement is actually capitalized on the government-wide and the related depreciation expense. That's why we see the difference between 213,000 and 165. And that would cover our basic financial statements. Again, I want to try to remind myself to pause and make sure that everything is okay with you guys and didn't have any questions I could focus in on those numbers.
Hey, Mike, where did the positive, like, how did the funds go up? So it wasn't because there was increased revenue, right? Or
No. Here, how do I easily go back here? So no, we do see a drop in total revenues. The drop in the revenues was a bit softened by the increase in property tax revenue, which I know you guys would probably expect year to year. But what we really do see here is a more significant drop in total expenses. So when you guys cut expenses by over 100,000, that still was able to drive the increase in that total net income here.
Okay, so basically costs were
down more than revenues were, yeah.
Okay, and then that led to a significant increase in the total funds balance. Okay.
Right. I would add also that there was only maybe about 3 months of cancellation. That's part of this audit. So most of that COVID damage is actually going to be coming into this next.
Gotcha. Okay.
A quick question on the insurance. I see that we reduced the expenses on insurance. Did we drop coverage?
Kevin?
That's most likely a bill timing issue.
Okay.
The other weird thing is that we get a refund from our workers' compensation, which is kind of outside of our controls. And I think there was 1 year when it was pretty big, and then another year where it wasn't.
Okay, so we didn't change coverage, right? It was.
No, we did not.
Okay. Thanks.
I didn't have any notes on any extreme changes there, but workers' comp is a strange animal. And I know the modifier rates with the carriers change year to year based off of their risk and what issues that they're dealing with. And the fact that claims would stick around with the district for a long period of time, which I don't know that you guys had a lot of. I do think that year over year, you guys typically get a refund. So you guys don't have a habit of understating what total payroll costs would be. And that's a driver of what the total cost for workers' comp insurance would end up being. So any refunds that we actually captured and brought into the accrual would reduce that total expense as well. And if those refunds increase, then I guess the total expense would probably decrease as well, if that helps. These were good questions. Was there anything else we could look at? No? Okay. Aside from the basic financial statements themselves, then we get into the footnotes. This is kind of the more boring spot. If you guys have trouble sleeping, you can refer back to this tonight. But essentially, we start out with the nature of the agency, that you guys are a special district, how you guys were formed and when, and then you immediately dive into the basis of presentation in your primary accounting policies. So these would usually stay very similar or exactly the same year over year, unless there were any significant changes in how you guys manage certain estimates, like useful lives of capital assets, or what you guys would actually capitalize, or what else? If you guys decided to change the effect of what you guys recognize as available revenues, things of that nature. I don't think you guys have any board designated funds or a lot of earmarked fund balances, so there's not a whole lot of restricted net assets we have to concern ourselves with. But definitions of governmental funds and what it is that we're looking at in the financial statements will also be in here. Definitions of what you consider to be cash, prepays, capital assets, and the like. So again, when we were going through these, if you did see changes in here, we would probably focus in on it. This year was not one of them. So I can probably just keep going on past here. The rest of these footnotes really provide context to the numbers that are found in the financial statements to kind of help the financial statement user hone in on figuring out what makes those numbers up if there's not a lot of detail. A single line item for total cash, at least here we can get a breakout now of how much is with the county, how much is with checking. There was a balance in a money market before, but I think that may have been either stock or some other type of asset that was liquidated and ultimately moved. Petty cash on hands, things of that nature. You wouldn't get that level of detail from the financial statements themselves. So you will find them here in the footnotes. Let's see here. So again, most of the cash held with county, no big deal there. Moving on past all of that. Then we have capital assets. What you notice as a change for last year is we actually provided a little bit greater detail in these capital asset footnotes. So before, rather than just showing ending balances as of the fiscal year and that we're reporting on, we actually show the breakout, by classification, but also the starting balance and what changed throughout the year to result in those ending balances. Now, there weren't a whole lot of changes in 2020. We did see that the pool shed was almost done. The end of 2019 was actually completed in 2020. So we see that transfer from construction in progress to buildings and improvements. Otherwise, it was just real minor stuff, not a whole lot going on this year. We also show 2019 because we were showing comparatives in the financial statements. We gave context to those balances in here as well. There's a little bit more activity here, but it doesn't really look like you guys have had massive purchases really since, I guess, the construction of the pool, really. But if there were anything major and you wanted to see what the changes are in that fixed asset balances, is where we would be to look. Depreciation expense was about the same from last year. The only reason why it decreased actually was some estimated useful lives came up to term, essentially meaning that they've been fully depreciated and those assets are no longer contributing to the depreciation expense in 2020 or moving forward. As you guys purchase new stuff and you start to amortize those new purchases over their estimated useful lives, that'll start to contribute to what the total depreciation expense would be for the year. A lot of these are, especially in GAAP compliance, you're looking at straight line and you look at an asset life that for you guys is typically running anywhere from about 5 or 7 years for tools and equipment to much longer, obviously, for the building improvements and the pool itself. So those will still be some items that you'll see depreciation expense on over the years to come. Deferred revenue, we did kind of talk about the fact that it is, in fact, much lower. So if you didn't catch it by looking at the comparatives, we at least explain it here as a result of some of the program restrictions and closures, that you guys had to deal with. And I'm sorry to hear that you're going to still continue to deal with it for a little bit, but hopefully that changes in the next little while, I guess. We can be hopeful. We do kind of highlight what the differences are in the accrued compensation, which I believe is just vacation hours for the staff here. You guys don't have a whole lot of complexity like we see with, say, some fire districts where there's a lot of different types of pay that are accrued. So the only liability that you guys would accrue are vacation hours that are earned and have to be paid out, whether it's when employees take vacation or when they're terminated and they no longer are employed with the district. You guys don't have a whole lot of complex retirement plans and post-retirement and pension plans, so this note's rather short as well. And moving on, we do have the footnotes to kind of just explain what some of the excess of appropriations when you guys went over budget in certain areas. Now, we only focus on the areas where there is a variance in the negative aspect. Of course, there were other areas that you guys actually were in the positive. Much fewer in 2020 actually, which again, during this period of time, it's actually quite a tough thing to do. So we just kind of highlight some of these key areas, nothing really huge to focus on. It's when we see massive changes, like if you guys expected payroll to be 200,000 and it came out to be 500,000, then we would start to investigate that and figure out what happened and why you guys expected the number to be so low or why it ended up being so high. So I don't think there's anything fantastic to dive into here. 2019, I think, is on the following page. Yes. So we had a few more individual accounts, and salaries and benefits would be the one area really. Capital asset purchases, I don't think you guys budget for necessarily, so that's always going to show as a variance in the negative. But otherwise, there was just a little bit more activity in 2019. So there's a few more things going around. I don't think that there was any other concern or risk or areas, so we didn't actually have to dive into it too further other than kind of doing our normal expenditure testing. We do have a footnote kind of talking about the COVID considerations, which kind of provides a little bit of context as to why we saw the drop in revenues, at least for program services in 2020. And since COVID was not a subsequent event, although its effects still are, it happened, essentially during the 2020 fiscal year. There were no other events that happened after June 30th of 2020 that we thought were extraordinary or unusual or anything that would require separate disclosure or explanation. So we provide a definition here, but ultimately state that there were no subsequent events determined that require disclosure or any types of adjustments to the financial statements themselves. And that's about it for the footnotes there. We do have the budget to actuals, which show up at the back of the report. This would provide the whole level of detail. So like you saw in that first note where we only showed the certain negative variances, we see a lot of other areas where there's positive variances with the budget, which in 2020, you guys were actually under budget for what you expected total payroll expense to be. And pretty much across the board for all the areas, utilities, supplies, repairs, and maintenance, you name it. So this would provide like the context for your entire income statement and what accounts were budgeted for. And of course, we show 2020 first, and 2019 still is providing context for the comparison from last year. And again, really, so in closing, the financial statements came out pretty clean. There wasn't a whole lot of complex accounting issues that we had to address or seek out any type of expert advice or opinions. You guys have a very straightforward set of books. You guys are very organized. We're able to get through the audit, and we didn't have any follow-up questions or issues that would have created a further delay into issuing these reports. And thank you guys again for being organized and ready to go. Thanks again for having us again for another year, and hopefully we can do it again next year. And we should hope for everyone's recovery out of the whole pandemic thing, and we can start to maybe get back to some type of normal.
Thank you. Anybody have any questions at all for our auditor while he's here? No. So it's an unqualified audit, right?
Unmodified opinion, correct. Yeah, clean audit opinion. Yes, sir.
Okay. And Kevin, I think we need to approve it as a draft so that it can become final.
We would approve the draft.
Yeah. So it looks pretty similar. I mean, the blip is, of course, COVID-19, and it impacted the last few months of this. I did notice that there was a large variance downward from director fees in 2020, and that was because that's where I think we put the possible cost of an election that we didn't have to bear. Is that right, Kevin? Because I looked at that and I go, 1,500 versus 157,500. I go, that's a big difference,
We were expecting that to do the special election at a cost of roughly 155,000.
Right, that's what I thought. So that's the only thing that jumped out at me, and I just want to note that for everybody else because I was aware of that. All right, well, I guess the next item would be someone want to make a motion to approve the draft.
I'll make the motion.
Okay. And
I'll
it's
second it.
4 seconds. Okay. Any further discussion? To me, it looks pretty straightforward compared to all the other years I've seen. Like our editor said, hopefully COVID will allow us to open up and we'll go back to more normal looking books. But we've got enough reserves to survive another year. God hopes we don't have to live another year this way. But with such reduced income, we'll see what happens. Future's unknown. Any other remarks? And I'll call the question. You want to poll us, Kevin?
Let's see here. Director Chow,
I'm sorry, what was the question?
yay or nay?
Yeah.
Director Racy,
Yay.
Director Sethi,
Yep.
Director Weslowski,
Yes,
and Director Bajaj is absent.
that's right. So the total is four yes, one missing. I forget how we account for that. And I want to thank Mike for doing a good job of presenting it.
Thank you.
You know, we appreciate it. I think that pretty much handles that. So we can go back to the consent calendar. Anyway, thank you for your presentation. Appreciate
Thanks
it.
again. I hope it's okay. I have a little bit more work to get done, so I'm probably going to step out at this point, but feel free to give our office a call, send us emails, whatever it takes. If you have questions in the interim or about this report itself, we're available.
Right, and it becomes finalized with the management discussion and analysis added, I recall. So, okay, so that's approved. We'll move back to consent calendar. Does someone want to move to approve the consent calendar? And we can discuss it. I'll move to approve it. Need a second.
I'll second.
Thank you. All right. Interim financial report, meeting minutes, check register, and receive the general manager's report. Go ahead, Kevin. I think this is where you.
Sure, I do have a quick addition to the manager's report. There was actually a break-in. I forgot. Someone actually, it looks like they were stalking. It didn't look like it was an accident. They brought tools. It looks like they were trying to get in from multiple doors. They eventually managed to pry open the lifeguard room door, and they stole an iPad. And so we've put in a couple different plates to make it a little bit harder to get in. But it looks like just because we're not there as much as we normally are, the facility is a target, it looks like, for the near future to return to normal.
You are breaking up a little bit, I think.
Oh, what was the last part?
I think the estimate is true, but I'm aware of the fact that I think a few words were dropping out.
Oh, okay.
Maybe just for me, but perhaps for everybody else too. So that's the only addition to the manager's report.
Yes, yeah.
Okay. All right.
When was this? I couldn't catch that.
Oh, I'm sorry. It was a couple weeks ago, and yeah, they pried open basically the doors we have. They're commercial doors, so there's a bolt that goes in the top and the bottom. And what they did was they actually pulled the top open and then managed to get something down to press the lever to open it. Yeah. So they what the fix is that we have basically a plate that covers that, so you can't pry it. You can't put it down. So we've installed. We're in the process of installing those in several locations. Unfortunately, the guard room itself is not alarmed, so you know that's kind of a vulnerable area.
Yeah, and they use that tool in several other places. It was discovered on a Monday morning, and I happened to be working out in the pool that morning. And every other place they tried, the tool was ineffective because of plates, making it impossible to pry doors open, and the nature of the doors. So, all right. Any other questions? No. Well, then we need to approve the consent calendar. You want to poll us?
Sure. Let's go in reverse order. Weslowski. Oh, did I break out?
No.
Oh, Director Weslowski.
Aye. Approval.
Director Racy.
Yay.
Director Sethi,
Approve.
Director Chow,
Approve.
and
Thank you.
Director Badaj is absent.
Yes. All right, so consent calendar was approved. Next item is number 6, amendment to board policy 1010, claims against the district, second reading. Is there anything we have to do for that?
Just just adopt it if that's what the board would like to do. I think that was just a minor correction in the, I think we said adopt.
Yes, one word change.
Right.
It has a wrong word in it. Word that didn't make sense. That's right.
Oh, occurrence.
Occurrence, yes. So, and that doesn't require approval.
Oh, no, it does. It definitely does.
Okay. Well, I move to approve it. Somebody want to second it? The motion?
Second.
Thank you, Misha. Polis,
All right. Director Chow, aye, but I think you're on mute.
Approve.
Oh, there we go. Director Sethi,
Yep.
Director Racy,
Yay.
Director
approval, yes. All right, and then the items so approved for, and one director absent. Annual board policy review. These are the 3 we're looking at this time around.
So these look okay to me. I did have a little bit of a correction in policy 1035, which is association memberships, training and education and conferences policy, kind of a lot in one. When it was approved, it was going to reference another policy that was not yet passed and still isn't passed. So it was going to reference policy 3, something in the 3000 series that would lay out per diem expense rates. And so, I looked at this and I thought to myself, we could make our own per diem expense policy and then pass it and then revise it every year, or we could just use the one that's already published by the U.S. Governmental Services Administration. So that way we don't have to do it all the time. They keep track of all the per diem rates, so you can look it up online. And so I figured that might be a clean way to do it, where we don't have to kind of refresh it all the time or decide what's a fair per diem rate or what's the rate in Los Angeles versus somewhere else. Not that we travel that often, but anyway. So the revised language is in there. If you have a different way of doing it, I'm totally happy to look at other ways that we can do this.
It makes sense as a way to streamline having to adopt policies that already exist and serve well through through many other governmental bodies. I agree with you. That was a good choice. We're not stuck updating some financial policy, every year for one reason or another. It's a good choice. So those are the first readings of those 3, right? Yeah. So we don't need to vote on those on the first reading, I don't think.
That's correct.
Yeah, okay. Or pass them by acclamation. That pretty much brings us to the end of the business for tonight, other than as he put in the manager's report, I'll jump back there for a second. Try to get your training done as soon as possible for ethics and sexual harassment. I know it's not fun. I made it through them, once again.
What are you talking about? It's so much fun.
Yeah, well, yeah, I hear what you're saying. 2 hours of listening to those guys. In fact, for some reason on my Mac, when I took the ethics one, which I've taken every couple of years for several years now, I heard every other word those guys said 3 times. For some reason, it stuttered. And I don't know if that happened to anybody else, but it didn't take longer than 2 hours, but I heard everything almost everything 3 times. And it drove driving me insane, I'll tell you. Anyway, I hope that Kevin said it didn't happen to him, so I'm going, good. If anybody's got to suffer, I guess I deserve it most. But I also wanted to, even though it's not agendized, thank you all for making it to that planning meeting the other day. I think we all got to know each other a bit better as a result. That helped. So, we've come to the end of the agenda, so I guess I do have to call for adjournment, unless anybody else has something else to share, because we only see each other once a month.
What's the current status of the pool? Is it closed?
No, Kevin.
Okay.
We are open. We're green. Pool's operating as normal.
Gotcha. I just walked by there the other day. I think it was the weekend, but it was empty. What are the general hours for the pool?
So currently we do lap swim in the early mornings, Monday through Friday, 7 to 10 a.m. And then in the afternoon, we have our swim team from 3 to roughly 7. On the weekend, we do have a couple hours of lap swim from noon to 3.
Noon to 3. Gotcha.
We don't have any we don't have any weekend lap swim that I'm aware of, or I'd be signing up for it.
To do that, because we had that in January, so I don't know why it would end in. We should be having it on the weekend.
Oh, okay.
Well,
and that's what we're able to do under COVID-19, because each one of the lanes is a separate entity for a person or their family, and that's the best way we can do. I sign it. You have to sign up in advance, and if you don't hit it on the exact second, you don't get a slot. As I hit 50-50 now, So, and one of the other swimmers this morning was saying, "God, I feel like writing a bot to make sure it hits it every time." I said, "Please don't. It's hard enough as it is now. You miss by a second, somebody else usually gets in there." So, but yeah, that's the extent we've been able to be open. But we have been open for that for months.
Okay.
And not many other places are.
And then what's the swim team? Is that a team that rents out the pool, or how does that work?
Right, no, it's our own swim team. So that's actually our youth swim team. So we have 2 coaches, and then we have usually 1 or 2 swimmers per lane. If there's 2 from the same family, they can swim the same lane, right?
How does that work? It's a Rancho swim team that competes with other high schools, or okay?
Well, not high schools, but other cabana clubs. And one thing that we're doing that's pretty neat is we're starting to compete at USA Swimming. So we're competing in things like Junior Olympics, Far Western, things like that. Before COVID, nowadays, I mean, not really happening. But
how does that swim team? How does it operate? Like, how do you guys get members, or how does that work?
Right. So most of the time, those swim team members are usually they take lessons, and then they kind of go through something called pre-comp. Pre-comp is a bridge between lessons and then swim team. So lessons is very short. It's usually 25 minutes. Some people double up and they do 50 minutes, but it's mostly instruction, so you don't really get all that rigorous aerobic activity. We have a pre-comp, which is half and half. And so you get a little bit of advanced training. You learn things you wouldn't necessarily learn in swim lessons, like flip turns, racing dives. I mean, a lot of people don't know about, for example, 2-hand touches or down breaststroke. You'll do that, and then you'll also get 25 minutes of aerobic training to build up to swim team, which at that point, then it's more, you're really looking at, you're going to be doing sets that work on different types of muscle groups. You're going to try to work on increasing your aerobic capacity, things like that.
And how does one sign up for lessons?
Right now, there's no lessons because of the county. But typically, we would have a registration day.
I see.
And you would come up and sign up. I think that is something that will probably be online at some point in the future.
Gotcha. So right now, the swim team is all comprised of people that had probably previously taken lessons, and then now they transitioned over to the swim team. How many kids are a part of, or how many people are part of the swim team?
It fluctuates. So in the summer, our team gets really big, and in the off season, it's very small. So at this point, I would probably say there's maybe between 30 and 50 kids. I'm just pulling that number out. I would have to check.
Okay, gotcha. So basically, it's very hard for somebody new to join the swim team now because there's no lessons. It's kind of a precursor to joining the team.
You could actually try out for it, but at this point, it's very difficult only because the lanes are all booked.
Gotcha.
So normally you might have to swim, 3 in a lane, and that's how we get 3 to 7. But right now we're trying to make do because of the distance.
Okay, and then does the swim team bring in revenue, or how does that work? Is there like a
Right. So so the swim team does bring in revenue. It's $100 a month. This is something I can cover, I think, in the third orientation.
okay?
And but generally it's revenue neutral. Swim team doesn't bring in in a normal year, it's roughly revenue neutral. But the big value that the swim team brings is that it's something that swim lessons get to look up to. And B, that's where we get a lot of our staff from.
Gotcha. Okay.
So money wise is not really the main.
Yeah.
It has other purposes.
Okay. Awesome.
Very valuable program.
Awesome. Okay. Good.
I wanted to thank you, Kevin. I saw the little pamphlet that we got for the outreach.
Yeah. Did you like it?
I saw it. I haven't been able to provide feedback, but I don't know if I should because I provide my feedback in this forum.
Yeah, I think you're probably set. And you'll see some banners go up as well. I believe tomorrow we had a little bit of a hitch. We were going to put a banner up on Bollinger,
Okay.
but that was delayed. Some issues beyond our control.
But thank you.
I saw, the banner on the fence facing the barbecue pit this morning.
Yes, that one's up, but there's a different one that hasn't gone up.
So yeah, I looked at I used the dot on this thing to go look at the site and read everything on the site, and it sounds very good and neutral, informative, so congratulations on that. A further answer to you, Director Chow, is in normal times, the only aquatic activity that actually is more than revenue neutral is swim lessons, pretty much. The rest of them break even if we're lucky, So, and traditionally it's been what we've offered, for 50 years is people have learned to swim here, and under COVID-19 that's it. People can't get close enough, so we've got to keep doing what we're doing, and hopefully we'll get down to one more level of transparency and be able to take off, again.
Awesome.
But at least we're open as much as we can be, Yeah, I mean, doing what we can, and I'm proud of it, and you're all part of it. So, all right. Well, any other questions, anybody? Because as Newport said, it's a good time to ask them. All right.
Yep, and reach out to me if you have any issues. I'm happy to go over anything.
Awesome.
Yeah.
Great.
All right.
You said on my end. So I move to adjourn.
Yes. And who seconded?
I'll second it.
All right.
All those in favor, rather than poll for this, I think adjourning.
Yes.
Yes. All in favor, okay. All right. Take care. Have a
Thank you, guys.
Take care.
Bye-bye.
Later.
Bye.
Bye.